Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 31st report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. As you may see, we've got heating oil on top of our list with a 23% change in commercials positions. It's visible here on the chart. We've got 21% change in large speculators, and you can see these changes are definitely amongst the largest changes in the past 52 weeks range. It is coming at a point in time when prices are actually pretty high, close to important resistance levels. So this bearish COT change signal may actually be an effective one in the near term. Jumping to the 5 years chart, you may see that we are more or less in between the two major extremes, the bearish and the bullish. And we've just passed, or we're over a relative bullish extreme in that one. And the one I'm showing you right now, you can see how well it signaled this bottom over here. Now we are reaching a relative bearish extreme at a time when, of course, as I was just pointing out, we are close to resistance levels. This is not an all-time or close to all-time or anything similar extreme, but you may definitely see that even relative pullbacks may be good signals on the chart. Jumping to the crude oil, our next market, another energy market, we have a 20% change in commercials positions. Again, this is a bearish COT change signal. So of course there's a significant correlation between this and the previous market, heating oil. Jumping to the 5 years chart, you may see that the picture is maybe it is actually a little bit more bearish than we had in heating oil. You may see that the most bullish extreme was back over here at the end of 2012. That was the most bullish one, and the most bearish extreme was actually back over here early this year, which, as you may see, was actually a good signal. Since then, prices have gone lower. To be honest, I think it's better if we jump over to other markets to analyze. The extreme situation here is not that obvious, although if you are trading these markets, it is definitely more bearish than bullish at the moment. S&P 400, 19% change over there in commercials positions. You may see that change over here, but it is definitely not that large. I would actually skip it and jump over to the 5 years chart and see the extreme in this market, which is still closer to the bearish extreme. You may see that since early this year, we're more or less in the same range. The commitments of traders report could not change dramatically. We're still close to the bearish extreme side of the market. Jumping to large speculators, COT Extreme, we've got three currencies on top of our list. Let's start with the Canadian dollar, where we have a 235 report extreme in large speculators. So here's that extreme. You may see that was back over here in 2013, early 2013, when we had that extreme. It is, of course, a bearish extreme. You may see prices have declined last week, and this suggests that prices may actually continue this decline. So we may have reached the point where this rally has stopped. Pretty obvious picture. I don't really see what else I could add to it. Let's jump over to the Australian dollar with the 224 report extreme in large speculators positions. Actually, it's the same extreme in commercials. So that's over here, and you may see that this is an unquestionable bearish extreme. I think since prices have declined last week, we may see this as a top. Of course, the question is what's going to happen next week, but the chances are that judging by the past, whenever we had a relative extreme or such an extreme, you may see how well that signaled a top in the market. Our next market and the last market for this review is the Mexican peso with the 217 report extreme. Again, we're talking about a bearish extreme. Again, you may see a bit of a decline that we've witnessed in this market as well. So very similar picture in these currencies. We're not surprised about that, of course, and we could expect these currencies to decline in the medium to long term. As you may see, even in the Mexican peso market, we have some good examples when prices fell down after a bearish extreme. Okay, that is going to be all for this review. Don't forget you can look at other COT charts for free on our COT charts page. An in-depth and detailed COT analysis can be done on this page that we do the review. Of course, we have other great functions. The volume and open interest analysis page highlights for you to see as well. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.